This is the Ikusflow weekly market map. Last week, the question was simple. Did the backdrop get easier for risk, or did it get tighter? The interesting part is the split. Some charts are saying conditions got easier, while others are still warning that the market is not getting a clean green light. We have 22 usable indicators. I am using the charts for context, not reading a spreadsheet. The main risk-on charts worth paying attention to were ETF flows, Fear and Greed Index, Sailor Index. The main risk-off charts worth paying attention to were PBOC, Monthly RSI, Open Interest. Now, global liquidity. Is the funding backdrop actually getting easier? PBOC. As you can see in the chart, the line is mid-range and momentum is rolling over. The weekly move was minus 313.5 BCNY. That is tighter funding, so pressure stays on. That is the first clue. Now we need broad liquidity confirmation, not one isolated pocket. Fed. On the chart, the line is still upper range and momentum is rising. The weekly move was plus 2.03%. That is easier funding, but still needs dollar confirmation. That gives us the first cross-check. Now we need broad liquidity confirmation, not one isolated pocket. BOE. On screen, the line is still lower range, 33% below that high, and follow through is muted. The weekly move was plus 1.55%. That is easier funding, but still needs dollar confirmation. That gives us another cross-check. Now we need broad liquidity confirmation, not one isolated pocket. ECB. The useful visual is this. The line is mid-range, 5.3% below that high, and momentum is rising. The weekly move was plus 0.99%. That is easier funding, but still needs dollar confirmation. So liquidity is supportive. Dollar and credit are the confirmation check. Now, dollar rates and credit. Is stress confirming the move or pushing back against it? USO2Y. As you can see in the chart, the line is still upper range and momentum is rising. The weekly move was plus 2.46%. That keeps conditions tight, not clean risk on. That is the first clue. Now we need to know whether stress is fading or just moving around. High yield. On the chart, the line is mid-range, 6.7% below that high, and follow-through is muted. The weekly move was plus 0.29%. That keeps conditions tight, not clean risk on. So pressure is defensive. This is the risk confirmation layer. Now, crypto flows. Are macro conditions turning into real crypto demand? ETF flows. As you can see in the chart, the line is mid-range, far below the visible high, and momentum is rising. The weekly move was plus 710.0 million. That shows macro support reaching crypto demand. That is the first clue. The test is real demand, not just a nicer macro headline. Open interest. On the chart, the line is still lower range, 38% below that high, and follow-through is muted. The weekly move was minus 2.92%. That is tighter funding, so pressure stays on. That says crypto demand is not confirming yet. That gives us the first cross-check. The test is real demand, not just a nicer macro headline. Stablecoin supply. On screen, the line is still lower range, and momentum is rolling over. The weekly move was minus 0.52%. That says crypto demand is not confirming yet. That gives us another cross-check. The test is real demand, not just a nicer macro headline. Breadth index. The useful visual is this. The line is mid-range, and momentum is rolling over. The weekly move was plus 0.11%. That shows macro support reaching crypto demand. So crypto flows are mixed. Useful confirmation, not the starting point. Now, Bitcoin cycle. Is Bitcoin in a healthy trend, or is the setup getting stretched? Fear and Greed Index. As you can see in the chart, the line is mid-range, 52% below that high, and momentum is rising. The weekly move was plus 56.25%. That keeps the cycle read healthier. That is the first clue. Here the question is health versus crowding. Sailor Index. On the chart, the line is mid-range, 45% below that high, and momentum is rising. The weekly move was plus 40.86%. That keeps the cycle read healthier. That gives us the first cross-check. Here the question is health versus crowding. Monthly RSI. On screen, the line is still lower range, far below the visible high, and momentum is rolling over. The weekly move was minus 31.70%. That makes the cycle look crowded or fragile. That gives us another cross-check. Here the question is health versus crowding. Mayor bands. The useful visual is this. The line is mid-range, 14% below that high, and momentum is rising. The weekly move was plus 5.90%. That keeps the cycle read healthier. That gives us another cross-check. Here the question is health versus crowding. Thermocap. As you can see in the chart, the line is still lower range, 25% below that high, and momentum is rising. The weekly move was plus 3.86%. That keeps the cycle read healthier. That gives us another cross-check. Here the question is health versus crowding. Social heat. On the chart we are at a new visible high, and momentum is rising. The weekly move was plus 1.41%. That keeps the cycle read healthier. So the Bitcoin cycle is supportive. That tells us whether the move has room or looks stretched. A few slower indicators did not publish anything fresh. BOJ, Global M2, DXY, Move, US Manufacturing PMI. That matters because no new print is not the same thing as a new signal. The practical takeaway: start with liquidity, confirm with dollar and credit, then use crypto flows as the demand check. This is a map, not a trade recommendation. The edge is knowing which part of the chain is improving, which part is arguing back, and what has to confirm next.